Hi students, I welcome you all to the GST marathon. Now your indirect tax comes for 40 marks. But remember, taxation is a subject which really scares you in group 2. And to crack your group 2, you need to clear your tax paper with good marks. So first let me tell you a small little strategy that in your group 2, okay, you have a subject such as tax for which direct tax is 60 marks and your IDT is your 40 marks. Now what happens is the DT part is what I will be covering, okay? I'll be covering the DT part, and from your indirect tax you can easily score 30 to 35 marks. Because the paper comes very easy, it's very scoring, portion is limited and you can easily clear. So if you manage your 30-35 year, you're sure to clear. And in my marathon, I will make sure that I will take you all through the past exam papers, the section numbers, everything in order, so you don't have to worry at all. Even if you're starting now, you would know exactly what you need to do for your GST and customs. Clear till here? Can I have, before I start with the marathon, I'm going to go section wise, and in the next 2-3 days, I will cover your full GST for you. Okay, full GST, and I also look at the past exam questions so that you find it very, very simple. Including when I'm teaching along with the amendments. So you don't need to run from here to there. Just sit with me peacefully, and in a short time, I will cover major portion of your syllabus. So before I start, can I have GTG in the chat box? Now, Catrioli is asking when I will launch the dream batch. Remember, for you all, I am given, first of all, I made the entire scanners. All the students should have the scanners. It is from the guideline answers. Each subject, chapter wise, I have divided it the question and ICSI model answers. So when you finish a chapter, you can look at the past exam questions and ICSI model answers. That is the scanners. Then the test series. The students have already joined. Many students have already joined the test series. The test series will be starting right from now. It's exactly 1 month for your examinations. So we will be starting the test series also. You can write. We are going to correct the answers along with your improvement areas. We will mention it free of cost. There is no charges that you have to pay. All the charges I will be bearing, but it is going to be tremendous importance for helping you to clear. Third is the marathon, and fourth is what Catrioli is asking, is the dream batch. So what is a dream batch? It gives you access to all the paid lectures at a 200-300 rupees. Okay, full, all group 1, group 2, all subjects, detailed videos you will get. So that also the next launch will be of dream batch only, and it will be in the next few days, 1 or 2 days. Now, before I start, can I have GTG in the chat box? Okay. Shri is already there. Great, Shri, to have you. What about others? Let me know, because in a short span, the lectures will not be very long. Lectures will be to the point in a compact session, but I will complete quality portion of your syllabus. So can I have GTG in the chat box, and can you all hit the like button also? This is just in the start I make that a point. Yeah. Shama, great to have you. And just my request, I keep these lectures in English, so it is your job now to share it with your friends. Okay, because students, two things, many students don't know about English lectures, and I do it specially for the South India students. Even if they are very less, I still take the lectures. Okay, where you see anyone would have gone for other things, but I especially ensure that no student should have a language barrier. Okay, so you please go ahead and inform in your groups. Next, cube trigger is also good to go. Let's start. Okay, let's start. Meet is also ready. So let's start. Okay. Now, I'll tell you how I plan to go. I plan to go it section wise. I will cover your full syllabus. Don't worry. It's not only today, tomorrow, day after. During that time, your past exam questions, all the sections that have come in your exams, rule numbers which have come in the exam, all I will be covering. You can open your entire past exam questions after I done with the marathon. Then you check I have covered everything. Okay. So let's begin. Hi, so I welcome you all to the GST marathon. This GST marathon is going to be section wise, and I'm going to cover all the sections which are important from your exam point of view and which have come in the past exams as well. And these will all be covering the amendments as well. Now, before we get directly into the sections, we will first have a small, quick introduction about the GST law. So obviously GST is an indirect tax. A direct tax is directly the person earning has to pay the tax. For example, income tax. If I'm earning salary, it's my job to go and pay the tax directly to the government. Whereas indirect tax, if a business, it applies on goods and services. So let's say if I'm seller of goods, okay, I have a right to collect the tax from the customer and then deposit it with the government. So the customer is indirectly paying the tax to the government through the business owner. That's why it's called as indirect tax. Though the profit is earned by the business, but we have a right to collect this and transfer the burden of tax on the consumers, buyers, clients, etc. So obviously I'm sure you must be aware about it. In your direct tax, the administration is done by CBDT, Central Board of Direct Taxes, and your indirect taxes, the administration is done by Central Board of Indirect Tax and Customs. So currently we have GST and Customs which form your indirect tax, which is therefore 40 marks for your examination. Clear? Now, what happened is, before GST, prior to GST, there were multiple laws for goods and services in different scenarios. So government said that why have all different taxes for service, different tax for goods. In goods also they used to have, if it went interstate, OCTRA used to be levied, VAT used to be levied, CST, all on goods. And for service we had service tax. So then the government said that all these taxes we have to subsume it, merge it into one tax called as GST, and that is why it's called as one nation, one tax. One nation, one tax. So all the central taxes that the central government used to levy and all the taxes that the state government used to levy were subsumed, clubbed into one tax. Excise, excise, you had some of custom duty like CVD. All these were the central taxes which were merged, and VAT was the important one which was merged. CST was the one were merged from the state government which normally used to levy. Now obviously it was very simple that we should have had the one nation one tax policy from the very beginning. Why have all these widespread taxes? Do you think that the legislators or the lawmakers were not smart that they made it complicated from before? They could have very well made a one nation one tax from beginning. So the thing was, the problem was with our constitution. The problem was with our constitution. The Constitution of India had divided the powers under section 240, under article 246, schedule 7. The powers were divided. List 1, only central government could legislate or make the laws. Which were in list 2, only the state government could make laws and legislate. And which were in list 3, both the governments could legislate. So when they saw central government, okay, the union list, only the central government can make the law, only. Which was in the state list, only state government could make the law. So when you went to union list, customs, income tax, excise duty, service tax were mentioned. So therefore all these taxes were levied by central government. So because the union list had these taxes, the central government could charge these taxes. So income tax was a central law. Even today it is a central law. Custom duty is also a central law. Central government gets the money. and there was one tax which was VAT, which was the state government was collecting. So every state used to collect VAT. So we could not have one nation, one tax, because the constitution need to be amended. To bring GST into force, the constitution was amended. And can anyone tell me which constitutional amendment had come? Which was the constitutional amendment number? Can anyone tell me what was the constitutional amendment which paved way for GST? Great, okay. It was 101st constitutional amendment. All I will tell you what it is there, right? Now, if we go into the legislative framework of how GST came before the 101st, I told you what was the amendment? Which was the amendment number? Please mention in the chat box. I have told you. See this. The constitutional amendment, 101st amendment came. Okay. Which brought GST into force. Which brought GST into force. So we are going to go in order wise. How did it come? So the very first start for GST. Now we are looking at the legislative history. How GST came. So in the year 2000, a empowered committee of the state finance minister was made under the chairmanship of Asim Das Gupta. So the first guy that you need to know, he was in 2000, in the year 2000, Asim Das Gupta, had an empowered committee was set up to bring in designing the GST model, to design the GST model. Then after Asim Das Gupta came, then we had Kelkar committee. Which committee we had? Kelkar committee. Okay, for implementing a nationwide GST. Then came P. Chidambaram. He introduced the national GST in 2010. Okay, and in 2014, what happened? Apart from the government changing, one more important thing happened. Government changed in 2014. Okay, central level, and that time in 2014 they passed the amendment which was there, 101st constitutional amendment. A bill had come, the 122nd amendment bill was brought in, okay, and it was passed. The years have been given. Now, the very first state, now what happened is, GST was brought, amendment, all the amendments in constitution was done. What amendments are? That I will tell you. Do you know which amendments were there? Section Article 246A, 279A, okay, and 269A. All these three important articles were there, because of which GST could come. What are they? That we will come to see. So, Assam was the first state to ratify GST. They approved the GST, followed by Bihar and Jharkhand. Now, if we go to see when was the GST law passed, so you don't need to know all this. I'm just telling you introduction. That in Lok Sabha on 29th March, Rajya Sabha on 6th April, and President ascends on 12th April. So the GST came into force from 1st July 2017. The rollout of GST happened on 1st July 2017. Now, I told you that the constitutional 101st constitutional amendment was there. But sir, what was the amendment? What was it that was amended in the constitution that GST could come in? Okay, so very simple. We are looking at that. Okay, so the very first one I told you, Article 246A, 269A, and 279A. Okay, and 279A. And 279A and 279A. So 3 articles. Obviously it is important, that is why I'm telling you 3 articles. So there are multiple smaller amendments also, but the key changes, key main provisions, okay, 101st constitutional amendment came. The very first one was Article 246A, Article 269A, and Article 279A. Concept clear? Yes or no? Yes sir, clear. Yes, sir. Clear. Good. Okay. Now pay attention. In 246 say, what did they say? That in Article 246 they had divided the powers. So then central government could pass a law on service tax, customs, and state government could make on VAT. So then they made an amendment that both, they put it in the concurrent list. Both central and state government can levy tax on both goods, goods and services. Simple. This was the amendment. They put it under the concurrent list. What did they do? They put taxing of goods and services in the concurrent list, so both central and state government could levy the tax. Now, sir, what happened in 279A? In 279A, they said that whenever there is a transaction interstate, so that I will tell you when we come to it. But just remember the provision that whenever there is a interstate transaction, a tax called as IGST will be levied, and 50% of that will be given to the state government, okay, directly without depositing it into the consolidated fund of India. Sir, what does it mean? Please explain. I'll come to it. And the third one, today, if there is any amendment in GST, can anyone tell me from where it comes? Who notifies any amendment, policy change in GST? Who does that? So very good. It is the GST Council. Who does it? GST Council makes the amendment. So now coming back to what was your Article 269A. So what happened is, pay attention, that normally it was held that the revenue from GST, from that the government earns from GST, will be shared equally between center and the state. Is this clear? So they say that if in interstate transaction the center collects the full money, but they cannot keep the full money, 50%. I told you, because whenever you see GST levied, you will see CGST 9% and CSGST 9%, right? You see something like this, where what is happening? Center is taking half and state government is taking, so the revenue is shared equally. Whenever there is an interstate transaction, government levies IGST, where 18% tax will be levied, but government in the back end, as I told you, will have to give the half share to the state government. That is what they have said, that no dispute, no problem, equally you all will have to share half. That is what has been said in 269A. Concept clear? Yes or no? Concept clear? Yes or no? So these are three important articles that you need to know. So what was it? Can I have a recap? Answer is yes. So Article 246A put the powers on concurrent list to levy the taxes, and power was given both to the union and the state to levy tax with respect to goods and service. 269A, whenever the government collected tax on interstate, that is IGST tax was collected by the central government, they cannot put everything in the pocket. So without putting it in the entire pocket, their pocket is what? Consolidated fund of India. How much they can put? Only 50% they can put, and balance 50% they have to share with the state. So that they will say that without depositing the full money, they have to give the half share to the particular state government also. Okay. Now going forward to GST Council, very important provision. Okay, very important provision. Now, sir, what is the GST Council and what is the role? Who is the chairman? How many times do they meet? How do they vote, etc.? So very important from exam point of view as well. So first of all, the who forms the GST as per the Constitution? This is the article of Constitution. So Constitution, you open Article 279A, they are saying that GST Council has to be formed, and the President of India shall constitute GST Council. So the original person who made the GST Council is the President of India. Now who will be there in this council? Now obviously members from the center will also be there, state will also be there. So from the center you have the Central Finance Minister, that is your Nirmala Sitharaman. She will be the chairman. Then in charge of Revenue Minister of each state will also be there as a member, and every minister in charge of finance nominated by each state will also be a member, right? So the finance minister of the state, India, finance minister of the state, and members nominated by the state will be there. Sir, what will be the role of GST Council? So whatever topics you have in your GST, open, go to your module, see the index, value, your value of supply, time of supply, input tax credit, your return filing, registration, e-way bill, all the rules with respect to that, all the amendments with respect to that will be made by the GST Council. Simple. Next, quorum. Now obviously the GST Council will have meetings in a year. Okay, the half of the total members should be present shall constitute the quorum. So what is a quorum? 50% means how many ever are the members in the particular committee in the council, 50% of them should be present for a meeting to be started. What is a quorum? What is the meaning of the term quorum? So quorum means that the minimum number of people required to initiate and start a meeting. Concept clear? Yes or no? Yes. Now coming to the decisions to be taken by the council. Decision to be taken by the council. So every decision, like how a special resolution is being passed. Okay. So a special resolution will be passed. Then the decision will be taken. So if they want to decide that should we increase the rates, should we keep only 2 rates of GST? So 75% has to be, members have to give the consent. Central government votes have weightage of 1/3, 33%, and state governments okay. So state governments will get a weightage of 2/3. Okay, so they've never asked, but if central government, it's only 1%, so their vote is 33%, and all of them together, I'll show you how the calculation works. Okay, that is also very simple. So pay attention. Your state government's one vote is 1/3, so 33% directly comes in. Rest, how many ever total states are there and how many are consenting? You have to figure out the percentage. So here, let's say 31 states are there, 22 have agreed, so it's a 70%. 70%. So their weightage is only 2/3. So you will multiply into 2/3, you will get 47.31 percentage. And then you come to know if it is collectively, you add this and this, you come to know the total percentage. You will say that whether it is passed or no. It has to be more than 75%. So whatever the central government gives, that will be 33%. If they say yes, 33%. Rest you have to do, find the percentage, how many are agreeing. So out of 31 states, 22 have agreed. So it's a 70%, but the weightage is going to be 2/3. So then you see this weightage, add it up, and then you come to know if 75% is done, then the resolution is said to be passed. Clear? Then again, some important treatments. Today there are some non-GST goods. Do you know there are some non-GST goods? Non-GST goods. So alcohol is kept outside the ambit of GST, and state excise duty and VAT is levied. So no GST is levied on liquor on human consumption. So today if anyone goes to buy alcohol, they will see that VAT and excise duty is being levied. For tobacco products, dual tobacco products and drugs, narcotic drugs, double taxes are there. So you are levying even GST and central excise duty is levied. Your GST is also levied and state excise duty is also levied. So for opium, tobacco and tobacco products, GST is levied and even excise duty is levied. Even for opium and narcotic drugs, double taxation is being levied because these are demerit goods. Government just really doesn't ban it directly. They charge double triple tax on it. Okay, so that is there. And then coming to the models of GST, very important. Now, as we saw that Asim Das Gupta, Kelkar committee had to decide that which model of GST we have to adopt. Now, globally, the structure of GST, there are multiple structures. Okay, so let's say this is a dual GST, central GST, and state GST. Sir, what does it mean? So there are different models, prime models globally. Where? Globally. So central means only the central government will charge, state has no role to play. Okay, so here we can say countries which are very authoritative, center has a lot of control. China, they will level central, entire revenue is taken by the central government. State, here central government will get nothing, like USA. Only each state will get the revenue, central government will get nothing. In a country like India, where center and state keep fighting, okay, and are two very strong bodies, they will never allow one body to completely take the tax. So in India, we follow the dual GST model. In non-concurrent, what happens? Goods are taken by central government. All the revenue earned from goods is taken by central government, and service is taken by the state government. So that is non-concurrent. But what do we follow? We follow the dual GST. So you can write it down. India follows a dual GST. Concurrent GST means both. Okay, so both central government and state government will share revenue equally for revenue earned from goods, or right. So very simple. In India, where the goods are being sold, both center and state will earn half, or where the goods or service, anything is sold, half is being shared. Concept clear? Yes or no? Okay, very simple. Now, just remember this and then we will start. Now, there was a tagline by the government that one nation, one tax. Yes or no? Have you all heard of it? One nation, one tax. Have you all heard of one nation, one tax? Yes or no? Yes, we've heard of one nation, one tax. But in reality, there is no one tax. Now pay attention to this. What is happening is, Government of India is really levying different types of GSTs. That if there is a sale within the country, if there is a sale within the same state, then CGST will be levied and SGST will be levied. Okay. So let's say if the tax rate, GST rate is 18%, then the revenue, state government will take 9% and central government will take 9%. If it is a intra-state transaction, So basically when you go to a restaurant, you will see half is there, CNS is there. But for interstate, for example, you imported the goods or you sent from one state to another, from Maharashtra to Tamil Nadu, the goods have gone. Then GST will be levied, called as IGST will be levied. Entire 18% tax will be taken by center, and then in the back end, the center will give it to the half to the state. So this is how it is operating. So because of this, we have different GST laws in India. So let's look. The central CGST is there. Then you have the state CGST, then UTGST, then IGST, and compensation cess. A compensation cess was, now it is going to be phased out. So The main law is the central law. Everything else is a replica of the CGST. So understanding the CGST Act is most and utmost. So with this, I have completed the entire introduction. Now we will start with the IGST Act in depth. Concept clear? Yes or no? I want clear in the chat box so I can start section wise. Quickly, I want clear or in the chat box so I know that you have understood the basic background, legislative framework, everything that is needed. And now what is important from exam point of view, from introduction I have shared. Now we are going to go into the section wise, which is very, very important. Right? Let's start. Now we will start with the CGST Act 2017. Now, if you go to see the structure of GST, okay, so now we are going to see the structure of GST. Very simple. If the transaction has been done from one state to another, then we have IGST that will be levied. That's a separate act. But if a transaction, that is, a goods have been sold or service has been sold, given within the state, then CNS will be levied. Is this simple? So now we are going to see the CGST Act, and automatically SGST Act will also get over, because CGST Act and SGST Act are replica twins. They're exactly the same. Now let's start with the sections. Now section 1 obviously will tell you the object of the act and the name of the act. So the name of the act is CGST Act. Okay. Then section 2 is the definition. Now when you come to section 3 to 6, okay, that is not important. We'll directly start from section number. Now the most important. Okay. Now we are going to start with the most important. So in reality, your entire CGST Act starts from section 7. Now I guarantee you, exam question has to be framed from section 6, 7 and 8. 100%. Any attempt you go, because this is the most important. Okay. Now let's start. Now first thing is your section. Now section 7 talks about a taxable event. That it gives you the definition of supply and they tell you the taxable event. So what is a taxable event? A taxable event means if this happened, the tax is leviable. If this happens, this act happens, the tax is leviable. For example, in service tax, if service was given, service tax will be levied. For example, custom duty. If there's import export, custom duty will come. So the taxable event was goods entering into or outside India was customs. For this, taxable event is the supply of goods and services. So whenever goods or service is supplied, GST will be applicable. Concept clear? Yes. Now let's look at the definition. We'll look at the definition. Okay. Now, very first one is section 7. Now pay attention. Full sections and subsection I'll make you learn. I hope you take right now I want you to take a book and pen, write down the section numbers along with the subsection. So section 1, 7(1)(a) talks about what is a supply. Now let me tell you why is supply important. Very simple. Now, common sense, if a small child will come to you and ask that when is GST levied, that when GST is levied. So you will say that GST is an indirect tax whenever there is a sale of goods or service. GST will become applicable, yes or no? Whenever there is a sale of goods or service, GST will become applicable. Now this word sale, you can say sale of goods, but you cannot technically say sale of service. It's a wrong English. So therefore the correct term in English is called as supply. Called as supply. So whenever there is a supply of goods or supply of service, GST will be applicable. Let's talk in reverse. Let's talk in reverse so you will understand. If I am selling something which is not goods, not service, can GST come? GST can never come. That is why it is called as taxable event. So what is a taxable event? Taxable event is at this point GST will come into life. If I am selling immovable property, sale of immovable property, sale of a house, can GST come? Answer is no, because it is immovable property. Here we require goods, which is movable property, or service. Only then GST will come. Concept clear? So let's look at the definition of supply. So supply they have given is an inclusive definition, means all forms of supply, whether you made a sale. So for example, I go to buy a watch and I come. So I paid the money and I got the money. It's a sale. Even transfer, now each one I will come later, but transfer, barter, exchange, license, rental, lease, disposal. So there are 8 items given. How many items? 8 items given. All these items are also supply, but this is a inclusive definition because it says sales includes, supply includes. There could be other things also that can come in. These are just given that supply includes, but not limited to all these things. Okay, which is made for consideration and in furtherance of business. So supply includes 8 categories if it is made for consideration and for business purpose. Okay, so sale, transfer, barter, exchange, license, renting, lease, disposal, any of these that you do for consideration and in course of business, it is a supply. Next, then they introduced later section 7(1)AA. They said simple that a transaction between an entity and its members is also, so when an entity is giving a service to its own members, like a club or an association, what do? They collect fees. Like if you go to societies also GST is levied. If your society has a swimming pool, has a club area, has all these things. So what is happening? You all are only paying the maintenance. So you all create a club, okay, clubhouse. Nowadays we call it as clubhouse. You have a clubhouse. Maintenance is given by the members. Members give the maintenance amount, and in return we get service. So this is also covered under GST. So if you go to any of these high-rise buildings where all these amenities are there, you have golf course, you have swimming, you have your football pitch, you could have a pool table, you could have a gym, etc. So what is happening? Service is being given by the club to the members. This is treated as GST is applicable here also. So very simple. After this amendment, obviously all the society who have clubhouses are charging GST on the transaction and the maintenance amount. Next, section 7(1)(b). Now pay attention to this. Section 7(1)(b). Sir, what is this section 7(1)(b)? Now this is also newly introduced. Supply of specified actionable claim. Now normally when you go, your actionable claim is under schedule 3. Your actionable claim is under schedule 3, okay, which is excluded. So these are the, in schedule 3 when you go to see, it's an exclusion given that on this GST is not levied. It's a negative list. So in that you will see actionable claim is given, but it is given except for gaming, betting, lottery, and all these categories which have been notified. So supply of actionable claims. Like a lottery is an actionable claim. If you win it and nobody pays you, you can take action in court. It is a receivable amount. So all this GST is leviable. So you will see today, if you go to buy a betting ticket on horse racing or any kind of online gaming, GST is applicable, right? So whether it be a game of skill or a game of chance, GST is applicable. Clear? So supply of specified is GST is applicable. So today, if buying any lottery, etc., state-run lottery, GST is applicable. Then comes your section 7(1)(b). 7(1)(b). What does it talk about? Import of service for consideration. Now pay attention. If I am watching, do you watch Netflix? Have you all ever taken a Netflix subscription? Yes or no? Have you all taken a Netflix subscription ever? A yes or a no? Now, obviously, it is possible that you might have imported service. You must have taken. Imagine you want to go abroad. You've taken consultation of a UK-based consultant. So you are importing their service and you are paying consideration. So what they are saying that, listen, if you have an import of service for consideration, and even if you are not doing it for business purpose, I am doing it for my own personal happiness, I am watching Netflix, or I am just taking for my own personal career prospects, I want to take an opinion, or I want to learn guitar from Ed Sheeran is ready to teach me how to play guitar. So it's an import of service for consideration, and whether or not in furtherance of business, doesn't matter if it's for business or no, GST is applicable. Then third, your 7(1)(c), it talks about Schedule 1 items. Schedule 1 item says that even if no consideration you've taken, they are deemed to be supply, and GST is applicable. So deemed supply even without consideration. So Schedule 1 items, in Schedule 1 they have told that even if you have not taken even 1 rupee, like you've distributed goods as free samples, or you've given goods to your own relative, business goods. So what is happening that there are criteria is given here. Again, pay attention that there is GST is applied if first is no consideration was taken. You did not take any consideration, but in the course of business, you have given your business goods. The government will say, listen, business goods you are giving away free of cost, GST will be leviable. So GST is applicable. Clear? Then we are done with section 7(1)(a). Sir, which section we've completed? Section 7(1). In that you have A, double A, AB. Then you had section 2, right? 2. A, B, C. Then you had B and C. You had B and then you had C. So I want you to write this down so you never forget it, okay? So there are only 3 subsections. All the subsections we are going to do. Now, there is subsection 2. No, now there will come 1A. Yes, 1A. Now what is 1A? That comes about Schedule 2 items. Sir, what is Schedule 2 items? So Schedule 2 items is very simple. We will be doing Schedule 1 also, we will be doing Schedule 2 also, so not to worry. So Schedule 2 items is basically telling that whether a transaction is a supply of goods or supply of service. So very simple, they are telling you this transaction treated as a supply of goods. For example, software. People don't know what it is, a goods or it is a service. So they have clearly told that it is a service, take it as service only. We say okay. So after the transaction, classified as supply of either supply of goods or services is given in Schedule 2. So 1A talks about whether it is goods or supply of goods or service. Then you will come to section 2 and section 3 and then you're done. So section 2 contains a negative list. What does it contain? a negative list. So here we talk about schedule 2. In 1A talks about schedule 2. Schedule 2. And 2 talks about schedule 3. Okay, schedule 3. And schedule 1 was spoken in which part? In 7.1. 1C. 1C. 7.1. So you had schedule 1, schedule 2, schedule 3. And 3 was very simple, that government can notify whether a similar point to government wants. If the government wants, they can notify that certain transaction to be treated as a supply of goods and not supply of service. So similar to that point, if the government ever wants, they can also classify. So government has a power to classify. Third point is not that important. Here this is very, very important. Is this clear? We'll do a recap also, and I want you to participate. Okay, so supply talks about supply. So in supply 7.1A, what is it? It gives you about 8 items which are inclusive. Then what is AA? About, they call it Residential Welfare Association. Okay, so RWAs, when they give it to their own people. Then 7.1B, what is 7AB for? AB, lottery. Very good. Lottery, betting, actionable claims. Then comes B. What is B for? Import of service. Import of service. Then I came for schedule 1 item. Schedule 1, that even if no consideration is given, okay, it will still be a supply. Schedule 1 items. Schedule 2 items classify whether it is a goods or it is a service. And schedule 3 items gives a negative list, that all the transaction mentioned in schedule 3, no GST will be levied. Concept clear? I want you to take a screenshot, note it down, and your job is done. Right? Now, directly we'll go to the three part. Okay, the 3 schedules. Good to go. Is section 7 absolutely clear? So we can start with the next important part, which is all your 3 schedules. I want clear in the chat box at least. Okay, so I know that you all can very nicely understand. Okay, so now we are going to talk about 3 schedules. In your entire GST law, there are only 3 schedules. Only 3 schedules, and your entire stuff is done. Okay, so now we'll start. Schedule 1. Sir, what is schedule 1? Schedule 1 is your deemed supply. So here, even if there is no consideration, law is declared it to be a supply. So even if no consideration, still supply. It is still a supply. Concept clear? Yes or no? Then, as I give you example of software. Now, many times it was confused that whether software should be taken as goods or it should be taken as service. So the classification has been done. This transaction, take it as goods. This transaction, take it as service. Very simple. And negative list is given in your schedule 3. So each one is there. A little technical and important is schedule number 1. We will be doing it. Okay. Now schedule 1 we are doing. Okay. Now schedule 1, I will teach you a technique that you will also know it perfectly. Schedule 1. Now what is a schedule 1? Sir, 100 times you have told that it is a deemed supply. What it is? It is a deemed supply. What do you mean by deemed supply? Deemed supply means that the transaction will be qualified as a supply even if it is made without consideration, free of cost. So the point is, you have to remember the keywords. One is, there is a transfer, permanent transfer of a business asset. Okay, transfer of a business asset. If it is a transaction between related persons or distinct persons, principal agent, and import of service. So the keyword that you need to know is trip. TRIP. A job is done. So what is it? Trip. So what is trip for? If you transfer a business asset, right? It's a business asset, and business assets, tax benefits and ITC must have been claimed. Okay, so a business assets, you are allowed to claim ITC. Now you're taking the benefits of ITC. Now just remember, it's a credit right now. Section 16 onwards is about ITC. So business assets are only a personal use assets. You can't take credit. So if I'm buying a laptop for personal use, I have to pay the GST. I can't take a benefit of the GST. Only business owners can take credit of that stuff. So what is happening? I am taking a business asset on which I have taken the benefit of ITC and I am giving it free of cost. So government is saying, what nonsense, you are giving it a transfer of a business asset free of cost. Anyone must have come, you must have given it to your employee. What do we care? GST is leviable. We don't care if you take in consideration or no. The value, market value of that asset, we will take, and we'll take the GST on it. Okay, why should the government lose revenue when you are transferring business asset without consideration? Yes or no? Everyone, business asset you are transferring without consideration. You are selling all your goods free of cost. So why we should take the loss of GST? We will take the market price of that value. We'll take the market price of that asset, calculate what should be the GST, and we will take the GST. You give free of business assets to whoever you want. Whoever you want, give your business free of, but pay your GST. So GST is applicable. Next, T sir beautifully understood that whenever a business asset has been transferred on which credits have been taken, even if you give it for free of cost, GST has to be paid. Sir beautifully understood T. Now R, related or distinct person. Now what happens is, if my sister has come into my shop, picked up a business assets and left, did not pay me any amount. So again, there is a related party. In related party, the price can be affected. Imagine it is given free of cost. So government will say why we should lose. In that case, whenever it is a related party, we cannot take the transaction value like 0 or limited. We will take the market price. Simple little point. We will levy even if you give free to your relative. Or distinct person is what? Understand what is a distinct person. A distinct person means having the same PAN but different GSTN number. So it could be McDonald Maharashtra and McDonald Tamil Nadu. So they both will have the same PAN number but different GSTN number because they are in different states. So they are different persons in eyes of GST. That one unit has given the goods to another unit in another state. So it will be treated as distinct person and two different persons, and GST will be levied. Why should we lose revenue? When you are not charging any money to your connected person. Third, principal agent also, government has the same logic that when a principal agent are two different persons, GST should be levied. And last is import. So T, R, P I told you principal agent, and I is import of service. So when I have imported services, okay, so from my related party, now imported person from my related party. So imagine you have Tesla India and Tesla USA. Tesla India and Tesla USA. Will Tesla USA charge us any service for consultation, technical support? Answer is no, we are holding subsidiary. So government is saying that, listen, if Tesla USA would have given the same service to unrelated person, they would have charged an amount. Why we should lose revenue just because you are related? So government has said that charge the proper value, ignore the transaction value. If it is 0, also ignore it, apply the market value. Sir beautifully understood. So if I am importing the service and we both are related, then obviously price will be affected, price will be compromised, price will not be the true market value. So in that case, we will apply the market value and take the GST as it should have been. TRIP, that's it. Only 4 transactions, sir. Only 4. TRIP done. Okay, TRIP done. Now in that, just remember that when a gift, now I told you in T I am doing a permanent transfer of a business asset free of cost. So government charges the a particular GST will be levied. There is one limit given that up till there government is allowed to understand, okay fine, gift has been given to an employer. So that amount is 50,000 rupees. Means a gift up to 50,000 rupees is exempt from GST. Gift up to 50,000 rupees is outside the ambit of GST. So if I take an asset and I give my business asset free of cost to my employee, I take a laptop. So what work you've done here? Massive sales you've done. Take the laptop, take it, it's yours. If the amount is up to 50,000, not more than 50,000, then no GST. But if it is about 50,000, then the full amount GST will be levied. Concept clear? Yes or no? Yes or no? This is also an important figure. For 50,000 rupees, it is exempt. Okay. Now, coming to the next part. Sir, beautifully explained. I know that. Now we come to Schedule 2. Schedule 1 was only trip. Only trip. Only trip, sir. 4 items you need to remember. Okay, sir, it was so simple. Now we are doing Schedule 2. Now what was Schedule 2? Schedule 2 really says that which is your, whether it is a goods or whether it is a service. Very simple. And it is very logical also. It is very logical. You read it and you'll say, okay, fine, I've understood. So, if I have, now understand this rule clearly, okay, so everything will become easy after that. If I have made a transfer of asset, okay, transfer of asset is a permanent in nature, permanent, or if it is not permanent, a temporary transfer. So in which, if for example, I take my car and I permanently transfer it to you. So can I say it is a sale? But if I take my car and I tell that I'm not permanently giving it to you, use it and return it to me and pay me 10,000 rupees rent per day. So this is not a sale. So permanent transfer will always be a sale of goods, sale of goods. But if I take any as goods and I don't sell it, but I only take consideration for a certain time, then it will be treated as a service. For example, renting of car is different from sale of car. This rule just remember, whenever they say permanently transferred, it is a sale of goods. Now obviously from here not everything is important, very logical also. Whenever title of goods have been transferred, it is a transfer of goods. Whenever title is not transferred, it will be a sale of service. Okay. Now, land and building. So even renting of property is a service. Treatment, car painting, beauty parlor services is all service. Okay. Permanent transfer, wherever they give you permanent transfer, it will be goods. Wherever they say it is other than permanent transfer, okay, like a managing director has been allowed to use the car for personal use. We are not selling the car to him, then it will be a service. When the business is shut down and each one has taken away the assets home permanently, okay, on seizing the goods, seizing of the business, then it will be treated as sale of goods. However, if the assets are being transferred into a new thing, A and B have become AB and we are continuing under a new name, then no GST will be levied. So if the business has been transferred as a going concern and the new entity is going to take it, so there is no sale GST to be levied. GST is only when it is a permanent transfer and the person is going to take it for personal use. Renting of immovable property is there. Now this is important. Construction. See, normally, if a house is being constructed, construction is a service. Construction is a service, right? Construction is a service. The builder is giving service of construction. So GST will be levied and will be treated as service. However, if the construction is complete, then GST cannot be levied. Now, how do you determine that the particular construction is complete? Till all of you all tell me, how can I come to know if the construction is complete? Obviously, if you must have got OC or CC, completion certificate or occupation certificate. That means if this is received, that means it is complete. Understood, sir? Understood. So if we have got the completion certificate or people have started occupying it, whichever you got early, anytime you get OCCC means the property is complete. So in that case, if you receive that and it is treated as it is the construction is complete, so GST will not be levied. So it depends that when you have paid the money. If I have paid the money after receiving OCCC, then it is a completed property. GST will not be levied. However, if the entire amount is not received, is paid, okay, and let's say the OCCC is not received, GST will be levied. Simple little point. Intellectual property rights are also treated as service. Software, I told you, is a service. Now action. Now we will see what is this action. Few more examples are also there on this. So I'll give you an example of a non-compete. So action means agreeing to the obligation to refrain from an act or tolerate an act or to do an act. So if I have agreed that you pay me 10 lakh rupees and I will not compete with you. So normally when one company buys out another company, they tell the promoters that don't compete with me. So if you go to see, when Havmore, it's an ice cream brand, it was sold when Havmore was sold, promoters were given extra money. Promoters were paid extra to not compete in ice cream business, to not compete for 5 years in ice cream business, right? So that means I'm paid money to refrain from doing an act, to tolerate an act, to not do something. So that consideration is also a GST because I'm giving a service of not doing something. Or if I take money that you give me money, I will not file a case on you. So you are ready, so I'm getting consideration to stop from doing something, right? To halt from doing something. So that will be considered as a. So with this, there are some situational cases which are important to know, which I will do it as well. Okay. Now, right to use goods. Obviously, if you use your right to use goods without transferring, okay, the title, then it is a service, etc. Composite supply, when goods and services are combined. Okay, for example, I'm going for servicing my car, and while servicing my car, they have put oil, they have put some part, and they have done servicing also. So the entire transaction will be treated as service. Supply by unincorporated body, I told you that RWA, Residential Welfare Associations, where a clubhouse gives a service, okay, goods, is supplying goods, food to its own members. It is obviously, if goods are being given, it will be treated as goods, supply of goods. Very, very simple. Now, I told you this situational question, I feel it can come in the exam. So market is important, okay. Now many times what is happening is, we are looking at section 7. We are looking at section 7 that normally when employees are leaving the job, okay, what do? When employees are leaving the job, they tell the employer, please, I cannot serve the notice period, take money and leave me. So let's say if the notice period is 3 months, I go to the employer and I say, I got a job in hand, offer in hand, I have to leave from next month. I can't serve the entire notice period. So I'm ready to pay some extra amount. So I am paying money, will GST be levied on it? Extra amount the employee is paying to the employer to tolerate his behavior of leaving the company early and not serving the proper notice period. So we will see. First thing is there has to be a contract. There must be an agreement to tolerate or refrain in the original contract. Okay. And let's see. Then, and always remember, I'll just tell you the simple rule also. For employer-employee relations, they have kept GST out of the purview. Okay. Whenever you see, when GST will not apply, when salary is forfeited, bond amounts, employees. So whenever they have employee related penalties, government have passed judgments that it is not treated as supply only, so GST is not levied. Entire for employees are exempted only. Liquidated damages for delay of construction. Now it is only levied when, now understand when it is levied. When priorly in the original contract, there is already mentioned that you are agreeing to tolerate an act. There is a difference. If the contract is silent, then no GST can be levied. Okay, for example, if you breach the contract and I later filed a case on you and I won damages, liquidated damages, GST cannot come because it was never mentioned that if you breach the contract, how much money you will have to give me. If that is mentioned clearly that if you want to breach the contract, you can do so, but pay me so much money, then GST will be levied. So prior agreement is needed. I'll give you a perfect example in where it comes. Airline tickets, they already allow you cancellation charges in the original contract only. That if you want, you can cancellation charges will be XYZ rupees. So there is already a prior agreement to tolerate that act, then GST will be levied. This is the simple rule, no other rule. Okay, sudden check bounce happens. I never told that I'm ready to bear a check bounce, so GST will not be levied. Okay, so breach of contract, no GST can be levied, because if in the original agreement no mentioning has been done, nothing can be done. Penal charges by statutory laws. So if the government has levied late filing fees, so GST will not be applicable. The wording should be that we are ready allowing that delay provided this much charges are being paid. So the wordings are very, very important. Check dishonor. I never told that you give me a check and you can bounce it. If that happens, then GST will not be applicable. Okay, because what happens, why should GST be levied? I'm not getting extra consideration. I am myself am impacted by your behavior, so already I'm troubled. Then government is also taking tax on that. That should not be the case. Now when GST applies, if the contract expressly allows early termination on payment of a fee, so early exit fee is there clearly mentioned, then it is allowed. When airline ticket, hotel booking, etc., okay, it is coming, then it will be allowed. GST is applicable. Late fee on delayed payment, if it is naturally bundled with the main supply, GST is applicable as a part of the main supply. Salary is forfeited, GST is not applicable. Employer, employee are always outside. Delay in housing, now obviously no tenant will say that you can do delay. Instead, it is like a penalty clause. It's different. Okay, so all this is there. And Schedule 3 talks about transactions on which GST cannot be levied. Section 7.3. Now Schedule 3 items are there. Let's look at Schedule 3 items. So employer, when an employee is giving services to an employer, it is covered under perquisites and Income Tax Act, so it will not come here. Services by any court, so court giving us on court fees, there is no taxes. Your function, your parliamentarians, what services they are giving to you as a nation, they are serving the nation, no GST is applicable. Funeral, burial and cremation services, no taxes. Sale of Land, no services. Actionable claims is not there except lottery, betting, gambling. On that GST will be levied. Supply of goods out of India without entering into India, and bonded warehouse and high sea sales, no GST is levied. Let me explain. If, okay, high sea sales, etc., simple. If we are here, I from China I order the goods to be sent directly to Dubai. Did the goods enter into India? So I had my dealer in China and I had my customer in Dubai. So I did not call the goods in India. I did not call it in India. Directly I supplied it out of India. So no GST, obviously, because the goods never touched India. Now they are saying one warehouse provision, that if it has come into the warehouse, I have done some changes in it, some kind of improvement, it is allowed. Manufacturing minor activities also allowed in warehouse. If I put it into a bonded warehouse and without bringing it into India further, I directly put it into Dubai, still no GST. Why? Because the goods have not entered into India for home consumption for the masses. Directly all this, even if it goes high sea sales, high sea is directly without entering into India. Your warehouse sales has basically touched the warehouse in India and then it went. But if it has not released here, then no GST can be levied. Common sense, because in India or in Customs Act, they say only from the warehouse when it comes into India, import is complete. So it happened that it has been all external transactions only. With this, we've completed section 7 in depth. Okay. Now we come to section number 8. Now, section 8 is also repeatedly asked in the exam. Let's understand what it is. Composite and mixed supply. Is section 7 clear? Yes or no? Is section 7 clear? Yes or no? Is section 7 clear? Yes or no? Great. Now we'll do your section number 8 and what is the rule with respect to that. So section 7, okay. Now pay attention to this. That in composite supply means a supply. So in both of them, composite and mixed supply. So in composite and mixed supply. Now they both are bundled supply. They both are bundled supply. Okay. Now what is happening? And mixed supply. So in composite, it is naturally bundled. It is naturally bundled. And mixed supply is artificially bundled. I'll tell you what it means. Wait. For composite supply, the rate of principal supply is applicable. In artificially bundled, the highest tax rate is applicable. Okay. Now, what is a bundled supply? Let me tell you. So when two or more supplies are made in one transaction, then it is called as bundled supply. For example, I'll give you an example here. Airline ticket. In airline ticket, you get travel services as well as food. So you get travel services as well as food included. So what is it? Government said these are naturally bundled, and normally long flights, it is very common in the industry practice, and they go hand in hand. They both go very much interlinked with each other. So then we will see which is the main supply, principal supply, which has the predominant element, which is the most obvious thing, that for traveling we are getting food. So in that case, whatever rate is applicable here on the principal supply, that will be taken into consideration. So the entire transaction of the, let's say the air ticket is of 50,000. So entire 50,000 will be levied with 18% GST. That is for composite supply. Okay. So I'm buying an AC and I get installation service free. So the goods element, AC is the main principal supply and the installation service is ancillary, not the predominant element. Whereas mixed supply, they are artificially bundled. They don't normally are not interdependent on each other. They are not interdependent. For example, a gift hamper. In a gift hamper, you can have a bottle, you can have chocolates, you can have a tie, you can have shoes, you can have etc, many things. So now they are not interlinked and it is not an industry practice to give it together. Neither is a customer expecting that these two are to be sold together. In that case, all of them have different rates. So which rate to apply? The highest tax rate applicable will be applied on the entire transaction. Concept clear? So again, what is it in composite supply, which is naturally bundled? Rate of principal supply is to be taken on the entire transaction. Okay, like if I go to buy a TV, with the TV I also get the remote. Okay, so the TV is the principal supply. When I go to buy a mobile, with the mobile I get the charger also. Now mobile might be the principal supply. Whatever rate is applicable on the mobile, the entire transaction will be levied accordingly, right? Now when you go to mixed supply, in mixed supply also two or more supplies are made, but they are not composite supply and they are not naturally linked. So gift hampers are the perfect example. In that case, for mixed supply, the rate of the highest tax rate will be applicable. Concept clear till here? Yes or no? That is it. Okay. So again, section 8 says that the tax liability on composite and mixed supply shall be in the following order. For composite supply, where two or more supplies are made, and here you see are made, and one of which is the principal supply. So there will be treated as a supply of the principal supply. In mixed supply, two or more supplies are treated. The highest tax rate will be applicable. So in composite supply, one of them is treated as a principal supply and the rate of the principal will be applicable. Here the highest tax rate will be applicable. So that is it. I am done with section 8 as well. In my next part, I will go ahead with section 9 and one of the most important is section number 10 as well. That is your sums for composition scheme. So that is it for today's lecture. Okay, I have completed the introduction and entirely till section number 8. Tomorrow onwards, I will be taking important parts, which is your section 10 as well. So that is it, guys. Thank you so much. Don't forget to share it with your friends, like the video, and do let me know if you need any help. And for details, more detailed lectures, a dream batch is coming, which is also the biggest gift which every student knows because it helps students get exemptions. So that is it, guys. Thank you so much. I will see you in the next part, that is tomorrow, covering the other important parts in a quick manner. Take care, guys. Bye.